Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the legend, Anna Kelly. Hi, Anna.
I love being with you every Wednesday, Michael.
It's so much fun.
Go just a little bit, right?
Woo, woo, race the roof. Hey, what I want to talk about today is, again, something you and I have been through half a dozen times in our careers, is a recession. I think we have one in the future. I actually don't think we're in one now. I think Q2 is going to be positive, but I think one's coming without a question. But what I want people to realize is I look forward to recessions. I think recessions are actually great times. I think recessions clean out the system. I think specifically in real estate, but it happens in stocks. It happens in crypto. I think there's a lot of people that get lucky with timing. They get arrogant, they get cocky, they get stupid, they get out, they get washed out, they get whacked. And that leaves more opportunities for the folks that prepare, do the work, that won't make bad investments. Because in a bubble, the experienced ones, we back away, right? I think Jonathan Twomley, for example, right? He's like, I'm out. He sold all his apartments, right? You're selling a lot of yours. I've sold some of mine. And we're willing to wait. And it doesn't feel good, right? We see everybody kind of flexing and saying, oh, we just got another deal and blah, blah, blah.
You're too conservative. We're going to make so much money while you sit on the sidelines.
Yeah. Right. So then a recession comes and smack. A lot of people go out, never to be heard from again. Some people get whacked, get cut in half. They limp through. They become better investors. I say that myself as somebody who lost 80% in 01. So believe me, arrogance got away, got a lot more modest. But for me, recessions are awesome because I get to do what I do well. I get to fish for motivated sellers. I get to call the price point. They don't, right? They got to come to me versus I go to them. And then most importantly, terms.
Yes.
That is why I like recessions. I just found a lender, Velocity Mortgage, that will do something that's called the 50-40-10.
Yes.
50% first, 40% second with the seller. So that it's a 90% combined loan to value. And all I have to do is bring in 10%. I just went through one of these with one of my other experts, and I took his 20% cash on cash to 50% because you can control the interest rate on the second.
Yes.
And actually get a lower blended rate. So I am so excited about the upcoming recession because I've been prepared. I was called conservative early, but we're just going to crush it going forward. So what do you think of all that?
Yeah, generally speaking, I agree. I mean, as an investor, we learn this is like investing 101, no matter what you invest in. Ideally, you buy low and you sell high, right? It's what we all wait for. And we've had a 10 to 11 year run, really probably should have been a 10. We actually hit a manufacturing recession in 2019. And I was preparing for that. I started selling a few things right as I was leaving AIG, thinking, okay, a recession's on the horizon. And then the Fed propped it up. We had this taper tantrum, a topic for another show. And essentially then the pandemic hit. And so, I thought deep depression, we are in trouble, right? The Fed did what the Fed did. We bounced back, but it's been very artificial, right? And so I've been preparing for a recession. And I will say, sure, I sold some properties early that if I had waited and sold them this year, I would have made a killing. But I don't care. I'd rather be cautious, watch what's happening, prepare, have some liquidity so that when those values do come down, we're in a position to buy. We're in a position to borrow. And that's the other important piece, right? When we have a recession, you have to have liquidity. Your tenants have to be paying, you have to be profitable, and you have to be able to basically be a strong borrower in order to continue to get loans. When a recession happens, those people that didn't sell, they're just holding on, hoping it's just going to bounce and get better. They may lose their properties, their tenants may not pay, and they might not be able to take advantage of those lows in the market. So I've been preparing probably early. But like you, when we've been investing this long, you watch the warning signs of the economy. And I was pretty blindsided by 08 and 09. I really was. And I had a big dose of humility teach me that if I didn't understand more of the macroeconomics of the system that impact me as an investor, I could go through it again. So this time I've watched and I've said, hey, here's the warning signs. It's time to take, there's a time to take the risk off the table. And generally speaking, Warren Buffett says the time to be greedy is when other people are fearful. That's at the bottom during the recession. The time to be fearful is when there's this irrational exuberance in the market that it can only get better and everybody's greedy. And we are at that time. We're finally tipping from the mass greed toward mass fear. When that happens, my heart goes out to the people that don't have this education, that haven't lived through it, and that are going to suffer, because I've been there. I've seen family members wiped out in the stock market and real estate, et cetera. So my heart bleeds for the fact that I think we're going to have a really severe economic crisis in our country over the next 2 to 3 years, whether it's continued stagflation followed by recession or something deeper. My heart hurts for the people, but we've also got to say, this is the time that we can be the people, we can be the person that helps the people who are hurt, right?
We're trying.
We can take advantage of the economic situation in terms of making a wise decision without taking advantage of the people. So what I love about terms, what you just talked about, is if there's somebody that they're desperate to sell, they just have to. It's either they go into bankruptcy, or I can work out something with them that's a win-win that allows them to walk away without damaging their credit, basically losing their life savings and never having a chance to go. And I can be good to them working out terms. I love creative financing during a recession that helps people and also allows me to really continue to move forward and buy low while everyone else is afraid of real estate. And that's what's coming.
Yeah, it's funny you talk about your dose of humility coming in 08. Mine came in 01, as you know, right? Lost 80% of my stack.
Yeah.
And then 08 came, and as you've read in my book, I nailed it, right? Sold houses right at the peak, right? People like to talk about people calling the peak. Not only did I call the peak, I took action and 1031 into apartments, right? We went from 8 to 80 units because, again, people don't realize this. Multifamily and singles they don't have the same curve, right?
Right.
When one's up, sometimes the other's down. So 1031 nailed it. Sure, the balance sheet looked worse for a little while, but rents went up. So we crushed 08. And like you, I saw something coming in 19. So I sold 2 apartment buildings in late 19. Like you, I went back and did the math. I lost $500,000 because if I would have held them about 18 months after the Fed did their things, cap rates came down. But I feel great. I mean, with what I knew in 19, it was the right move.
Right.
Did I know a pandemic was coming? Of course not. Did I know that cap rates would fall another 1.5? Of course not. So if you want to point at me saying, you lost $500,000, go ahead. I wouldn't change a decision.
Right. But again, you didn't lose it. You lost that opportunity.
I still think about it, Anna.
I'm sure. I know. I look at mine, but it kind of comes back to another adage is like, you can't really time the market. So timing the market is tough, but time in the market is what really yields wealth. And so even selling stuff early, I'm sitting in a substantially better position than I was 10 years ago. And
I'd rather sell early than late. How about that? So,
right. And you de-risk, and here's the thing about markets. You watch these signs and you say, are we closer to the end of the expansion?
Yes.
Or are we closer to chaos? And so you want to get out before you start hitting the fear. Yeah. Because once you're at the point of fear, you have a very short window to buy, refi, sell your properties before things shift. And so being able to get out just before gives you that assurance of preservation of capital. Yeah. And in a bottom, we're all about growth and appreciation and trying to stack up income as much as we can. But when you're nearing the top, it's time to shift and say, now we need to preserve everything that we have and not be the one left holding the bag going, I should have gotten out a little bit sooner. So I sleep so much better at night, having sold what I did, being in a great position to buy in the future, that the opportunity cost loss really doesn't bother me, Michael. It really doesn't, because I'm going to take advantage when we hit the bottom.
Yeah, it doesn't bother me, but every once in a while when I think about it,
coulda, shoulda. We always
I tell you what, though, I won't think about it once I deploy the capital. Right now, it's just sitting there. Once I deploy it and go, hey, I got this and this, then it'll be okay. But right now, it is an opportunity cost. So
exactly. Yeah, absolutely. And I've even refied a bunch of properties, took cash out. I'm paying interest on those loans every single month, right? Me too, yeah. But I've shifted the inflation risk onto the banks instead of onto me and my cash. So, just stay in, but realize there's pain ahead. And it's not going to be fun for the average American. If you have not already positioned yourself to be able to weather a recession, some cash reserves for your own expenses, some cash reserves for the properties that you already own, you could be in trouble too. So take some of that risk off the table and then sleep well at night and be prepared for when there is a recession, because it'll be the best time for you to buy real estate that you've seen in the last probably 7 or 8 years.
And I just want to hit one more point again. A lot of people think recession, you know, buy low, sell high, all of that. I want to reiterate a point. Real estate is lower price is good.
Yes.
Terms are great.
Yes.
Learn terms, learn lending. I mean, the ability to go into a deal like Lumberjack and I did, change the loan program, come in with he put 25% down because it was a bank loan, right? LTV. Yes. I showed him how he could have done the deal with 10% down, which, oh, by the way, means he could have done 2 of them.
Yes.
And his cash flow went up because you get a blended interest rate below what a bank can give you. It's amazing. So again, lots of you are thinking a recession means lower price. Sure. A recession means you can use terms. And if you
motivated
get terms,
so absolutely
do the work.
And that, Michael, is how I continue to grow in the midst of the deep, deep recession when lenders would not lend to me.
Yeah.
It doesn't matter that I had great credit, that I had been faithful paying my loans. I worked for a company going under and I was a real estate investor. And that was enough for banks to say no.
Nope.
So I learned creative financing. And by learning creative financing, I did multiple deal after deal after deal with motivated sellers, bought their 4-unit properties, super low fixed interest only payments, paid them off, saved them their capital gains, and it allowed me to really start scaling. And so now, even in the midst of these high prices, how have I done some of these deals that I paid top dollar for? I negotiated terms with the banks, with the sellers, and I made my cash on cash return significantly higher than any other investor who was just looking at it as a 25% down, go to the bank and get the deal done.
Yeah, I will routinely beat the people that don't understand that terms are way that you really, I will put less money down. I will get more deals and my cash on cash will go up. That's how good I am.
Absolutely. You're good. You're good. And this is why we have this show, right? Because you can learn from us who've done this before, because when things start to crash, you're going to freak out and think real estate's over and you're not going to be able to get loans and you're going to wonder what to do.
Yeah, that's why we're here every week. It's why we do what we do. Anna, where can people find you?
Great. You can find me here every week. You can find me on my playlist. You can find me on social media at Anna Kelly REI Mom. For coaching and masterminds, reimom.com. And if you're interested in investing as an accredited investor into apartment communities where we make an impact on our residents, you can find me there at greaterpurposecapital.com.
Thank you.
Thank you, Michael.